Good morning, it's Thursday, December 19th, about 6 a.m. Central Time. Overnight, the precious metals are weaker across the board, but well off their lowest levels. Some headlines that I'm watching here: the Federal Reserve, they cut 25 basis points to 4.25 to 4.5. It was a very hawkish cut, and they said that they were going to take a very cautious approach. Now, a lot of traders out here reached out to me. They saw that there was a cut that took place, and then they were really confused by the reaction not only in the metals markets, but the U.S. equities and things like that. The problem is that you want to see continuous cuts down to that lower terminal rate. And the problem is that the inflation has just been bumping along so high now that 2% inflation target is most likely not a likely scenario whatsoever, and that number's got to come up. So what happens is you get only 2 expected interest rate cuts in 2025 and 2 interest rate cuts expected in 2026. This comes versus the 3 and 4 that they were previously expecting. Remember, you need many interest rate cuts in order to propel that gold market on up to the $3,000 level. So if you look at PCE, that's what the Fed's preferred inflation gauge, they'll forecast going out into 2025, and they were forecasting 2.1%, just above that 2% threshold. They ramped that up to about 2.5%. They're saying that certain areas the inflation is very sticky. So the dagger yesterday, and where we really started to break down, was when Powell said that today was too close to call and the market accelerated its losses, meaning that there was a slight possibility that they didn't even cut rates at all. I think that it was more just baked in the cake here, and that's why they did it. So if you look at the U.S. equity markets, they have the S&P 500 has its largest one drop ever. The Dow has its longest losing streak since 1974. You look at the crypto markets, Bitcoin pulled back, got right around just on either side of about 100,000 before bouncing back up. So you look at the overnight price action here in the gold market and the precious metals. You do got gold down about $21 at $26.32. The range on that was $25.96.70. The high $26.40.90. So dip briefly below 2,600, where a lot of people kind of waiting for that type of move. They're waiting for these breaches of these large psychological levels to reposition in that market. You get the silver market at $29.95, down 78 cents. That's about a 2.5% decline. They'll factor in where the decline was and the change from yesterday after what they consider the pit session close. So the gold silver ratio, that goes up to about 88-1. I don't anticipate that it holds at these levels whatsoever. I anticipate that we'll probably creep our way back down to about 83 to 84-1, meaning silver's going to gain on the gold market. So you look at copper down 7 at 408.5. Platinum down 5 at 930. You shift to the outside markets. You look at crude oil down 19 cents at 69.86. You get the US dollar. Now, we've been forecasting this, if you've been watching the Metals Minute for a while, that if we saw this breakout, that it would retest the 108 level, and that's exactly what it did yesterday. So it is coming off of that level, and you'll have several other central banks, they'll make some announcements. So I think that the dollar index takes a breather at this level, and they kind of focus on some of these outside markets, and I think that we get a bit of a relief rally here today, especially in a lot of the foreign currencies. You got the S&P 500, it's recovering up 29 points at 59.70. You go to our wealth management side, if you guys are working with us on the wealth management, you saw Bill Baruch on CNBC yesterday on the halftime show. He indicated he trimmed NVIDIA, he trimmed Micron, and then he also added S&P 500. It's the spider puts going out into February. So that really softened the blow on the wealth management accounts. I log into other wealth advisors that I have accounts with, and it was much worse than what we have because of the fact that we have the put options and it's our tactical options overlay. If you're interested in the wealth management side, reach out to me and we can set up an appointment with our VP of client strategy. Now, getting to some key technical levels here, you go into the gold market, it is more of a coiling consolidation. The market needs to close above 20 26.35.10 in order to avoid a bearish trend and stay more neutral, so back and forth. Only a close above 27.50.70 resumes the bullish trend, but that 27.50 was a double top. So some levels that I'm watching, the 50-day moving average at 27.01, the trend reversal point at 27.50.70. Again, we got to close above that. We close above that, it's going to be party on. And then we'll have negated that double top there. The critical level of support, which we already breached it, was at 26.35. And again, if you've been watching the Metals Minute, I said if we broke below that level, chances are we're going to test 2600. That's exactly what we did yesterday, and we saw that happen. So the low is 25.96.70. So today's probable ranges, and I ran some refresh ranges. On the upside, 26.51 on the gold market. That's if we continue to get this rally. And if we get a big short covering rally, I'd say about as high as we can go is about 26.69. On the downside, those critical levels are going to be that 26.06, and if we break below that, we throttle through those overnight lows, chances are we're going to go down to 25.82. So you look at the silver market, that really shifted to a bearish trend back on December 13th. It broke below the 200-day moving average at 30.44. Obviously, we're trading below $30 right now. Your resistance point is going to be 32.17, so that's about $2.50 higher. And then your 50-day moving average that is your 50-day moving average, and then 32.50 just above that. So probable range on the silver breaks today's low, the overnight low, 29.68.5. It's going to be 29.44. On the upside, 30.25 and 30.54. Those are your two kind of critical levels here. So this comes at a point where if you're trading in these markets, you really want to think about position sizing and having a plan. So if we break below that $29, which that's where, or I'm sorry, below 30, which is where we're at right now, you really want to use some defined stop losses, things like that, or perhaps look at call options going farther out. But now I think you got to get at least out to that March contract for any kind of recovery here. On the U.S. equity markets, I really believe that there'll be dip buyers upon this big sell-off here because of the fact that one of the ways that they battle inflation and they position for it, because it's going to be higher for longer, and we saw this all back last year in 2023, was that you saw them position in the U.S. equity markets, and that seems to be the place to be. So you got any question, give me a call, 312-858-7303. Probably going to be looking at a lot of the cryptocurrencies, a lot of U.S. equity positions, maybe some dip buying on the silver and the gold market here today. And then we're going to start to revisit the oil market as well, because it's one of your best ways to position for higher inflation. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.